of the CattleUSA Daily Podcast. Today we are welcoming Dan Gerhold with the Logic Ag Marketing Team and the CattleUSA partnership that we have with them back to the podcast, where we are going to be discussing today's market report, what is going on in the markets, what we are seeing. We are talking a little bit of consumer demand as far as the high beef prices that we are seeing goes, and just Dan and I's thoughts on everything that we are seeing in the market today. So without further ado, let's go ahead and get into this episode with Dan. Things are good. We're going to get some rain today, so can't complain too much about that. Busy as always, getting back into the groove of things. Still around here, it feels like, after my 2 weeks of traveling and all the madness that all of that was. I travel a lot, but it always just knocks me off my rocker whenever I do.
Yeah, you traveled a lot lately.
Yeah, I've been all over the country the past few weeks, but it's been good. I'm used to traveling. I used to travel full time, but it just gets me out of my routine. And I'm just like, I get back and I'm like running around like a chicken with my damn head cut off, it feels like. But
that's normal.
It's all right.
It's all right. It's normal. Yeah.
It makes me feel better when like I'm in my routine and running around like a chicken with my head cut off. I'm like, okay, it's not just the fact that I was traveling. Got it.
No. Get back to the routine. Life gets good. Yeah.
Yes, for sure. How have things been otherwise for you?
Just, chicken with its head cut off, trying to get the corn in the ground, and should have that finished up, and then record high markets, so.
We love that.
Love that.
Do you want to tell us about the record high markets? What's going on with the record high markets, Dan?
Big week last week, getting that cash market to jump, 223, 224 in the north. Southern trade knocking on 220. It looks like they bought some earlier this week, 217, 218 in the south, but that's pretty normal. They'll go chase some poor doing cattle. Make it appear that the market is topped. Sounds like a lot of people are holding out for 225, possibly 230 this week in the north. Those are big numbers, Lauren. I don't know. They might get it. We still have the leverage. It's possible. Anything's possible up here.
Yeah.
It's feeder cattle side of things. We have yet to touch that $3 mark. Yesterday's high was August feeders. The high was, change screens here, $299.90. So
really close.
We're right there. Either let's do it and blow through it, or we're in trouble. So good. I don't know. It's a lot of fun when you're setting records, but it puts me a little bit on edge because I've been in this business long enough to know that the record setting doesn't last forever. So I think we're all fortunate that it's lasted this long, and I'm optimistic it could be good going through summer yet and maybe into early fall. It's a lot. You're expecting feed yards to pay a lot for replacement feeders. I know they're selling fat steers at $3,400, $3,500, depending on if the weigh-ups are good. But, you're talking about a lot of dollars getting played with. I mean, a small feed yard, it's nothing to get $2.5, $3 million borrowed on a small yard. You're talking big yard, you're hundreds and hundreds and hundreds of millions. It's a lot. And I know, the banks aren't enjoying that. When you run your closeouts, as much as feed has cheapened up, it's good to see, feed cost of gains have come down drastically compared to where they were a year ago. But when you start applying all the other costs, yardage is not as cheap as everybody thinks, and interest is not as cheap as it once was. I mean, you talk about a $2,500 steer you're laying in, or a $2,400 calf. Your interest is getting more expensive than your yardage per head per day. So there's a pile of risk on these cattle right now. I hope guys are looking into some sort of risk protection. It's just, yeah. And the other thing with that is the deferred futures aren't giving us a lot of opportunity just yet. I think that's coming here towards the end of this week. But when you look at 206 and you're trading a 225 cash market, everybody, especially with break-evens being at 210, it's hard for people to want to pull the trigger and protect this price. So if we get it up to our break-evens, I think we got to push hard and really get some coverage in place, because the higher we go, the harder we fall is the old saying, right?
I was just about to ask that. Is this a situation where you're kind of thinking that, we're soaring pretty high above the clouds right now? Or are we going to be falling pretty hard as fall comes around potentially?
Yeah, all eyes on boxes, all eyes on kill numbers. Packers already have the kill cut just about as far as they can. The unions have them locked into so many hours a week. So it becomes this game of chicken. Will they lose money? Yeah. But how much are they willing to lose before they make some drastic changes? It seems like beef has plateaued here at this 340, 345. To get it to push up much above that into that 350 and beyond, that's a big ask on the consumer that's already strapped. I don't know. I struggle to see it. We're in the first week of beef month. Yeah, boxes are strong. I'm happy. This thing's not a mess. Don't let me play it off like that. But there is reasons to be concerned as we work into the end of the second quarter and into third and fourth.
Well, and we've discussed it on here before too, that we have to play that line between, yes, we want to be paid well for our beef, but we also need to still be providing an affordable protein source for consumers. Because if consumers are strapped and they're looking at the grocery store shelves and beef is the most expensive thing on there, but it's expensive by a long shot, they're going to turn to chicken and they're going to turn to pork, which is great. They're still having a really awesome protein source, but at the same time, we have to play that balance between beef being charged well and us as producers getting paid, but then also still being an affordable protein source for consumers. In today's cattle business, efficiency isn't just a goal, it is a necessity. Here at CattleUSA, we are excited to partner with MJE Livestock Equipment. They design working facilities that streamline your operation, reduce labor costs, and enhance herd health. Their modular systems are built to adapt as your ranch grows, ensuring long-term value and durability. Invest in equipment that works as hard as you do. Visit mjelivestock.com to learn more today.
Correct, yeah. It reminds me of a chart I saw, I think it was last week. Beef compared to pork or chicken, mostly pork. It was beef compared to pork at the retail counter. There's only been, I think, 4 or 5 periods over the last 10, 15 years where beef has been this, the ratio, just the price ratio, beef has been this out of whack. That puts me on edge because the people I talk to that don't have meat in their freezer, that don't buy halves, quarters, wholes, the people that go to the grocery store are not enjoying the beef price right now. So numbers are tight. There's plenty of places out there, they're starting to talk about this drought. Is the real deal out west. It'll be interesting how that plays out. Historically, a drought is short-term bearish to the cattle market because you're going to flood it with cows. You're going to pull those calves off the cows early and ship them. But it becomes long-term more bullish if you do end up slaughtering those cows. So how that all plays out in this, talk about a picture to paint, record high prices, and then throw a drought in the mix. So praying for rain for those guys out west.
1,000%. It's crazy to discuss things like that with consumers sometimes, because I also have friends and family that they don't have a freezer full of a half beef or a full beef or something like that, and that they are purchasing their beef at the stores. And a lot of people are they're still looking at beef, but they're turning to cheaper beef alternatives. They're getting their ground beef in bulk whenever they can. They're getting a lot of ground beef still, but you're not seeing people going and picking up a bunch of ribeyes or a bunch of briskets or those higher quality meat purchases that we always say that we export the shit and we import the good, and it's one of those situations where we keep the good, right? And it's one of those situations that if we don't have a consumer market that is willing and able to purchase our higher quality cuts, what is that going to look like for the beef market as we go around to fall and stuff? It's one of those situations where we want people, as grilling season kicks up, to not only be grilling hamburgers, we also want them grilling ribeyes and putting some brisket on the smoker and things like that as well.
Yep, absolutely. Yeah, you've got about 60 days of strong beef demand here. If we don't see a push through that 350, it's going to be hard for me to imagine the price is much higher than where they're at now. So,
1,000%.
like I say, step into that third and fourth quarter, start getting coverage if we get up to your break evens. I know nobody wants to cover a break even, and it'd be a lot more fun covering a profit, but it might be time in this market to start looking at it.
And you can always up your coverage.
Yes.
start now, just put it in there, put your cards on the deck right now, and you know what? If the market gets great, then call the team again, and you can up your coverage after that. But at least right now, if you're covering yourself at a break even, you're breaking even. Like, it's one of those situations that if you were a banker talking to me right now, I wouldn't be super happy about that. But at the end of the day, at least we're not in the red, right?
Yeah.
Like, it could be worse.
We don't need to go backwards on these cattle. It would hurt in a hurry. I just got done writing a big check for LRP myself, Lauren. It was a big one because it was a big pen of cattle. And, you know, you sit there and you're like, gosh, I wish I wouldn't have done that. But at the same time, those cattle made a lot of money. And at the end of the day, I thought to myself, well, if I wouldn't have just set that floor, stayed in the cash market, and fought for higher cash here, it could have turned out a lot different. So I'm going to keep pounding it, that, you know, as we work higher, keep layering in that coverage.
1,000%. And I think it's a business mindset shift for people, right? Because LRP has not been a thing for a long time. And for a lot of people, they look at it and it's a use it when you have to, or it's an option that's there, but I'm not even really going to look into it. And it's still very new in this industry. And so for a lot of people, it can be scary to look at that and be like, I am writing a check for how much money? Just in case? What do you mean? But if you've really got to like switch your business mindset too, right? Of like, we are playing a game of risk. And so what is the risk and reward ratio that you are willing to play with your business? And I truly believe that the people that aren't going to start reshaping their mindsets to that place in the cattle industry are going to start to see themselves in some pretty tough situations as we go about in the years forward, especially in comparison to their neighbors who have made that mindset shift.
Yep, absolutely. You know, I'm fortunate to work with a lot of farmer feeders. I'm fortunate to work with a lot of ranchers. None of them really balk about buying crop insurance or buying PRF. But at the end of the day, the LRP premium drives them nuts. And I just hope they don't give up on the LRP at the market highs. There will be a time where market prices are depressed and maybe it's worth the risk of not using it. But at the same time, when you're at record high prices, it's time to really get into it.
%. Well, as far as the market goes, are there any other things that we missed today? Anything else that we need to hit on that you've been seeing in the past week?
You know, cattle have been following equities up and down. Equities recovered off their lows, so cattle did the same. If equities stay strong here for the month, I would anticipate cattle stay strong. So I'm optimistic there. I'm hoping these grains make a bottom here. They're getting pretty scary low, below cost of production. So I'd like to see a bounce, maybe get some managed money buy-in. You know, it's especially with the drought going on out west, it'd be a good time to step in and start looking at feed needs.
1,000%. Dan, as always, thank you for your time today, your wealth of knowledge. We always appreciate it here at the podcast and the team. And I mean, I just enjoy spending my mornings talking about all of these things with you. So thank you as always. And to all of you listeners out there, make sure you like, subscribe, rate, review, do all of the things. We really appreciate it. And if you want to get in touch with our insurance team here at CattleUSA and see what that looks like to get some LRP coverage, we are going to have that CattleUSA Insurance link down below where we partner with Dan and his team to provide that for you guys. So make sure you go check out those show notes, get that link, go get your coverage, and we will see you all tomorrow on another episode. Have a good one, y'all.